I'm looking forward to. I'm excited.
Yeah, this will be great.
All right. Well, I want to thank everyone so much for joining today. Another Balerion Space Ventures podcast. It's May 8th, and today we're joined by Jake Schneider, the founder of Atlas Analytics, a company that is using space data and AI to turn world's economy activity into something we actually see and can quantify. Jake, thank you so much for being here. Maybe to get things started, you can give us the overview of what Atlas Analytics is, what you guys are exactly doing, and we'll just go from there.
That sounds great. Well, hey everyone, hey viewers, welcome to the Balerion Space Ventures podcast. My name is Jake Schneider. I am the founder of Atlas Analytics. We conduct macroeconomic forecasting from outer space using satellites that circumnavigate the planet every 90 minutes and have a revisit time on same location of 5 days. And we do this to predict GDP ahead of government releases. Some people will know, but some might not, that GDP, gross domestic product, the seminal number that indicates the health of both this US economy and the global economy, it comes out with about a 3 month lag. So it's released a month after the quarter has ended for the first release, then 2 months later for the second release. The final number doesn't come out until 3 months later. And by that point, the market has already moved. And if you are a financial investor, a real estate investor, this has major implications for your investing portfolio. So I don't want to take up the airwaves too long. That's my short soliloquy about what we're doing. And I'd be delighted to tell you a little bit who I am and why I might be qualified to talk about this.
Yeah, absolutely. I'm curious, what's the origin story here? The specific moment of frustration with traditional economic data that pushed you to say, I need to build this rather than, you know, write a research paper or just use this and start your own personal trading, operation. What led you to, found this company?
Absolutely. So a little short background on me, and then I'll answer your question very directly. Actually, let me reverse that. Let's start with answering that very directly. So the direct
Okay.
answer is my first boss was the former Federal Reserve Chairman Alan Greenspan, and working for him, we did macroeconomic forecasting for hedge funds using past data that was released periodically from various government agencies in collaboration with anecdotal evidence from people around the country, including iron smelters in Pittsburgh and the USDA in Des Moines, Iowa. And we would collect that data and use that into a nowcast that was used for industrial production. And I, being a good analyst for Alan Greenspan at the time, would read The Economist magazine every weekend. And one article in particular called The Watchers stood out to me. The Watchers was the idea that hedge funds were using satellite imagery of Walmart parking lots to forecast Walmart stock. And I thought, hmm, macro forecasting, Alan Greenspan, and satellites, there must be something there. And so I made it my mission in life, my mission when I went on to other roles and on to graduate studies at Harvard and at Oxford to build the alpha algorithm to see if we could use satellite imagery to predict GDP. And that's what we're doing today.
I love that. Looking at Walmart parking lots to see how Walmart's doing, that's brilliant. What other kind of use case scenarios? Do you have any other fun examples of historic events where satellite imaging has been used to predict, large market movements?
Yes, we have many of them. In fact, let me share, if you don't mind, I'll share screen and I'll talk
Sure.
about our financial performance. And we use this to predict GDP, and it turns out if you predict GDP, you have a pretty good signal for predicting equity markets, both in terms of tilt, the macro regime that's going to be coming up, and also which equities and particularly ETFs to invest in. And so I'm going to share screen and talk a little bit about the model portfolio that we use for Atlas Analytics for trading. So we sell data to hedge funds and investors and actually state and local governments for information on GDP. But we also, to incentivize the use, show how it can be used in the Atlas Analytics model portfolio. This is a post on our Substack at atlasanalytics.info, which I would encourage anyone on this call to go to and subscribe. You can get some pretty cool nuggets there, if I don't say so myself. Um, and this article from about a month ago shows the performance of our portfolio over the last 2 years, from May 14th, 2024 to April 8th, 2026. This says that we produced an annualized return of over 50%, and we've had a nearly 125% return over the last 2 years. So, how did we do that? By predicting GDP, you can do three things: adjust to the tilt of your portfolio. You can arbitrage the deviation between fundamental value and market sentiment. What the hell does that mean? I'll explain that in a second. And also trade the macro regime. So if you know GDP and you know inflation, you have a good idea of what's going to happen with what's called the policy rate, the federal funds rate, the interest rate that the Federal Reserve sets, that sets the tenor for the economic environment. And if you know that, you can do a little bit of foreign exchange trading, you can do fixed income trading. And so knowing GDP is really a pivotal and seminal piece of information. If you know it ahead of your competitors and ahead of really the government, you can use that for great financial gain. And that's what we sell to our clients.
Got it. And when you're creating these, when you think AI plus satellite imagery, there's a lot of data data you can look at, and maybe does it have something to do with an accurate prediction, or could you just be losing sense of things and it's not an accurate prediction? You're getting a false prediction. Do you how do you discover, like, what are the things you really need to look for? How do you backlog this test to identify the key things that actually do drive the markets rather than just, hey, it's an interesting find I found on satellite images?
So there's a bunch of questions in there, and they're all delightful. Let me start with one of them that you asked, which is what are we looking at in the satellites, and how does that tell us anything about GDP? And I see your question, and I raise you a question, which is what does this graphic that I've shown on the screen, maybe not you, Aidan, maybe one of the panelists, so let's get them involved, want to tell me, does anyone recognize this is a GIF, which is an amalgamation of a bunch of underlying images that have been time lapsed from the satellites over time. And does anyone recognize this place? Has anyone been here? It is you will once I tell it, you'll go, "Oh my God, you're right." But this building often is a good indication of where we are. Now, it's a dome. It's huge because these are big buildings. This is a big dome. Where are we? Does anyone know? Any of our panelists want to chime in?
I'll take a stab at it.
Take a stab.
Is this Vegas?
It's Vegas, baby. Yes, it is Vegas. Do you know what this building is that's being built here between 2018 and 2024, 2025?
That's an awesome glowing dome that I still haven't been to.
It is the Sphere. You're exactly right. So this is if a picture is worth 1,000 words and maybe a GIF is worth 10,000, this is an example of what we're measuring. We take satellite images from satellite constellations that are orbiting Earth every 90 minutes and have revisit on same location of 5 days. And we track from that raw image using computer vision and remote sensing the expansion of the built environment, the differential of land use, the increase of vegetation, and port activity. And you put all that together and you run it through a time series going back to 1982, about 50 years of data. You can train a model that takes our satellite imagery signals and compares it to GDP in the past, and then uses machine learning to say, the satellites show this and GDP does this. That tells us something. Then this is the interesting part. Satellites continue overhead in real time, but GDP, like we talked about at the beginning of this discussion, comes out with a 3-month lag. You can use the model that we trained, the new satellite imagery. You plug that new satellite imagery into the model, and you get an output of GDP, and we get it weekly. So we have a weekly signal on the micro fluctuations of the business cycle, so you can know not just what the next quarter will be, but what it is this very week.
Wow. Now, as someone who looks at a lot of space infrastructure and space data, I can tell you there's a lot of data that comes from satellite imaging. How are you able to sift through finding what are the things we should look at and what are the things we shouldn't be, spending too much time on because this is the entire Earth you're looking at. I, I'm sure there's some very powerful models out there, but it's hard to comprehend something that just encapsulates every image of the earth, every, you know, square mile, puts it all together and says, this is what we're looking for. This is the thing that matters.
Yeah, that is a wonderful question. I'll answer it by telling you what doesn't work. So there's been a lot of research on night lights, and often when I tell this project to people, if they have any information on satellite imaging for economic activity, they talk to me about luminosity, night lights. And it works in a backward-looking sense. But let me ask you a question, Aidan, or to the panelists. Do you think that nightlights change much from day to day, week to week, quarter to quarter, or year to year? Do you think luminosity changes very much?
I'm sure it does with seasons.
It changes a little bit, but not enough to be a strong signal for economic development, which is the strongest input into GDP growth.
Hmm.
So, what do you think is a good proxy for GDP growth?
Maybe ports and commercial real estate development.
Exactly. Exactly right. So there's an old aphorism for economics, cranes in the air, buyer beware. Um, if there's cranes in the air, there's construction happening. If there's construction happening, the buyer beware idea is that the price is going to be high. Well, that's okay for me because I'm trying to show that GDP is increasing in that area. And that's exactly what we're looking at. So we're looking at construction, land use, vegetation, and port activity.
Got it. Now, investors are naturally skeptical. How do you
Of course.
prove that Atlas is not just a cool story, but actually better, earlier, more accurate, and more stable than the status quo?
Yeah, let me show you our time series of our predictions so that we can validate that. We had a very big win last quarter. So I keep asking questions, but I like it that way to be interactive.
I like that.
Let me ask you, Aidan, or the panelists, does anyone on the call know that GDP came out 2 Thursdays ago? It was April 25th or 27th, something around then. GDP first release came out for Q1 2026. What was it? Does anyone know on the call? What was GDP in Q1 2026? Aiden, you're Googling. I can see
I
you.
am.
You're Googling.
I see grew an annual rate of 2% the first quarter.
That's exactly right. And we predicted on our Substack publicly 2 weeks before that let me show you so I don't get called, not that I would be said anything weird, but let me pull up. I'm going to show the Substack from April 26th, the Sunday before GDP came out. So I guess it was a little later. I get my dates mixed up. But let me share it. So time validated. Q1 GDP release, our official release, April 26th. This is about 4 days ahead of GDP's release. Here is our prediction.
Wow. Okay, so right on the nose.
Right on the nose. We nailed it. And just to validate that, we make a YouTube video that I would encourage anyone that's interested to come look at. It's on YouTube. I'm going to click it. I think it might start playing. Yeah, fun music. We got 17,000 views. That's pretty cool. And it's been on there for 12 days, so less than 2 weeks. You can watch this on your own time. I won't watch you watching me watch a video of YouTube. Um, but let's look at our what happened. And so it came out, and this is the analysis of our breakdown of how we predicted versus the BEA actual. The red is Atlas. We said 2%. It was 2%. And this is how all the components that make up our GDP forecast, our taxonomy compared. Does that look pretty accurate to you?
That looks very accurate.
Yes. Now, I have to caveat this by saying that this is the first release of three, like I talked about several times on this call. And so it will be revised. We're expecting a small upward revision. I expect this to end at around 2.2 or 2.3 for this quarter, but this is still damn accurate. And even if we said 2, we gave it to you in January, it's now May. And if you get the final number at 2.3 in June, do you think that's actionable for investors?
I do.
I agree. So we asked about the time series. Here's our time series for our live predictions, not back tests, actual live predictions going back to 2022 Q1.
Wow. Now, there's things that can affect GDP quite a bit that are maybe geopolitical, and maybe at first it can't really be seen with satellite imagery, but then of
Sure.
course it can. How do you factor in for these, these more unnatural events that don't really paint a picture when you're just looking at a satellite image?
So I'm gonna have to I can't answer your question super concisely. I have to go on to a little bit of a soliloquy, a little bit of a deluge, but I'll tell you about it. There are two things happening that drive equity prices. There is sentiment and there are economic fundamentals. And those diverge much more widely than people think. People often think that sentiment and fundamental value are the same. They are not. The market is not nearly as efficient as people think it is because what investment banks and hedge funds do is something called a discounted cash flow analysis, a DCF. They get to the value of a company by taking the 5 year ahead revenues plus a perpetuity of that thereafter, discounting it back by the discount rate, the federal funds rate plus a VIG, and they use that to make a price target. Now, the problem with that is if you don't know GDP a quarter out, how are you going to know revenues for a company 5 years out? How likely is it that we can estimate a company's revenues 5 years out? It's very unlikely. So DCF forecasting is actually very poor. And so you get a wide range of these price targets. And so because they don't really, a lot of investors have a lack of tradable information, they transfer it from trading fundamentals to trading sentiment. Oh my God, Trump said the Iran war is done. Buy. Oh my God, the Iran deal failed. Sell. And that leads to massive perturbations in sentiment that is very different from economic fundamentals. We take a different approach. And that's how we made the Atlas portfolio increase 125% over the last 2 years. I want to show you something and see if you think there is a correlation there. And then I see that we have a Q&A. So I will answer that in a second. Let me finish on this point, and then I'll answer Kaylee Watson's question. Adrian or Kaylee or anyone else on the call, do you think this chart, which shows the relationship between GDP, which is the red line, and the SPY, which is the ETF that tracks the S&P 500, do you think there's a relationship between these two?
Looks like there's a bit, yeah. It's
More than a
more,
bit.
much
They
more
they os
thematic.
they oscillate very much in tandem. If economic activity is going up, it turns out the stock market goes up at the same time. And if economic activity is going down, the stock market goes down. Now, this is interesting because GDP numbers don't come out until 3 months later. So they actually feel it. The market participants feel the fundamentals, even if they don't know it. And so by giving them that information ahead of time, you can adjust your tilt, arbitrage that deviation between how it should be trading and the sentiment that perturbates around it, and also do the macro regime. And so this correlation coefficient, Pearson's R is the correlation coefficient of 0.5, shows exactly that. They are moving in tandem. And so let's think about this. If you know the red line ahead of everyone else, you can model where the blue line should be and then trade it. And that is arbitraging the deviation between fundamental value and market sentiment in a nutshell.
Got it. Okay.
And that is how we use science to answer the age-old question of investing in the public equity markets. Kaylee, you asked a question, and I'm sure it was about, nope, not about that. I'm sure it was about this. This quarter, way off. This quarter, a little off. What happened? Um, Everyone, and I'm not saying this as a cop out, but a lot of forecasters really struggled in Q4 2025 for two reasons. There was a shutdown that happened, a government shutdown that happened in Q4 that took 1 percentage point of GDP off of government expenditure, which is a part of core GDP, and it subtracted about 1 percentage point. The other problem that we had at Atlas Analytics is we use core GDP to measure about 70% of the economy. Now, what about the other 30%? 5% of that is private inventories, and 25% of that missing 30% is net exports. Net exports is the trade sector, international trade. Kaylee or Aidan or anyone else on this call, do you think that looking at the sphere in Las Vegas and construction in Topeka tells you anything about trade, the international sector?
I don't think so.
No, it doesn't. No way. Exactly. No, it doesn't. And so what we do is we built another algorithm that has a patent pending on it called Jack. You don't know Jack. That's my joke. I'm
Correct.
going to be writing that article soon. Jack is named after my grandfather, Jack Schneider, and it stands for Joint Algorithm for Containerized Knowledge. What is Jack? It is satellites trained over the ports so that we can look at the ships and the crates coming off the ships. And we invented a computer vision algorithm that counts the crates and tells us how much trade is coming and going. Now, here's the problem, and this answers Kaylee's question. The reason we forecasted 5.2 is we didn't have Jack rolled out yet. And I was very honest about that in this video. In the very beginning, if you watch it, it'll say we made our biggest miss, and it was because of the lack of Jack. We had Jack shit instead of Jack. And so we have rolled out Jack for 3 ports, Newark, LA, and Long Beach, and that accounts for about 30% of trade, maybe a little less of maritime trade. Maritime trade makes up 80% of US trade, and about 30% of that is accounted for by those 3 ports. Now we're rolling that out, and we rolled that out for Q1, and that's why we did far better. Does that answer your question, Kaylee? Kaylee's having,
Yes.
yeah,
Yeah, I think so.
cool. So I've gone on a deluge of a deluge. Aidan, what else? What would you like to know?
So, who's the beachhead market here? Is this macro hedge funds? Is it multi-asset managers, state level forecasting groups, or someone else?
All the above, real estate, multinational corporations, logistics companies, trade companies, maritime companies. Whether you know it or not, you are trading GDP. Whether you are literally trading or just using exactly any company with a pulse needs to know what's happening with economic activity so they can manage their inventory management. So they can manage their future capital expenditures. And so by giving this information ahead of time, you can use it for your business planning or for literal trading. Now, our beachhead client, like the one you mentioned, our ICP, are hedge funds. And we used to think it was macro hedge funds. Any hedge fund needs this information, whether they know it or not. I talk to many hedge funds, and some of the fundamental investors, they'll tell me, we're a bottom up shop. We look at good equities, we buy them. We're GDP agnostic. What? How can you be GDP agnostic? A great company in terrible times will fail. A bad company in good times will do well. You need GDP, and they're not in competition. Security selection, which a bottom-up investor is, works in tandem. It's the best complement to macroeconomic forecasting, to market timing. They're not in competition. That you need both. And so I sometimes break through, sometimes I don't. They often are pretty rooted in their ways, some of these hedge funds, but I know and I'm convincing them, and I believe I'm convincing them that macro forecasting is an important part of any kind of security selection and asset allocation.
Got it. And I want to zoom into defensibility. In 5 to 10 years, what prevents a well-funded hedge fund or big data vendor from replicating what you do?
Well, to be a little coy and a little joking, in 5 to 10 years, I actually hope they will replicate it because I hope they will buy my company, will have an acquisition that will make Balerion Space Ventures quite a bit of money. And then a large hedge fund or a large data vendor like Bloomberg or a large bank like Goldman can have this technology and I'll ride into the sunset. Oh, Kaylee wants me to go public. That sounds good too. If you'd like to invest, Kaylee, I'd be delighted. Kaylee, you're very vocal. I wish we could make you a moderator, or not a moderator, because that's Aidan's job, but make you part of it. Like to meet you. If you are on this call. If you'd like, send me a message and I'd be delighted to chat with you. Um, um, no. There are three things that protect our competitive moat. Patents, of which we have three in flight. Stickiness, when a company subscribes to Atlas Analytics, we give them our proprietary data portal and they use that and they ingest it into their data stack. And once that connection is start being made, of which it'll become even stickier when we build out our API, which we're in beta of right now, then they ingest our data and use it for their algorithmic trading. Do you want to change your model when it's midstream? No. If it's working, why would you want Pepsi if you already have Coke? And so, and then the third is first mover advantage. It took me 8 years, a graduate degree at Harvard, and an MBA from Oxford to invent this. Now, it can be done faster, but you'd have to figure out a new way other than the way I'm doing it because I have the patents in flight. And so we think this is very defensible. The last thing I like to do, and I'm an economist, so I'm kind of hand wavy, so I'm going to do some hand waving here. Um, One circle of this competitive moat is GDP forecasting, of which there are several firms, Goldman Sachs, JP Morgan, the Federal Reserve System, yada, yada. And then the other are satellite companies like Orbital Insight, Descartes Lab, Geo Insight, yada, yada. There is nobody on the intersection of those two circles, and that is exactly the space that Atlas Analytics plays, and that is exactly the area, the crescent that we are carving out.
Okay. Now, AI is getting a lot better very fast,
Yes.
and Earth observation is getting bigger and better very fast. And, with these new technologies coming further along, the price starts going down. You know, what's stopping some Stanford kids from replicating something like this in their dorm? And maybe it's not a huge hedge fund that replicates this, but it's a new startup or 20 new startups that pop up in the next 2 years.
Yeah. Great question. It's still on the competitive mode. There's
Yeah.
a couple questions. One is surreptitious. You're kind of asking, can ChatGPT do this? Should we look at it?
Yeah.
Should we ask it?
Maybe not right now, but maybe it
Okay.
could in the future. Like
Let
maybe a new version of Claude could start taking all this data in and, realizing patterns.
it right now I've asked it. It says, uh, I, as in ChatGPT, cannot do this. Now, maybe
Okay.
in 2 or 3 years, try it on your own, or any of our viewers, if you're interested, try it and see what it says. It says something along the lines of GDP is one of the hardest things to forecast. There are a multitude of reasons, yada, yada, yada. Anyway, that's true. The other thing is, what about in 2 or 3 years? Could Chat GPT or Claude or whatever do it? Um, there are too many steps. It isn't simply taking like images of Earth and saying, tell me what's happening with GDP. There is multiple layers of neural networks that are using convolutional neural networks to extract signals that are proprietary and patent pending, turning that into time series data, using that with machine learning to forecast, and then using other things like seasonal adjustment to reduce the seasonality. There's imputation. This is a complex data pipeline that took me 8 years to invent. I don't think AI will ever be able to do it without human intervention to be able to tell it where to go.
Got it. And what if someone wants to just track a specific thing, maybe take a little less steps out, and they just want to look at, commodities of orange juice and track the weather, and they track the satellite images of the orchards. Um, how accurate is that today? They've been doing that for a little bit,
Yeah.
but as it gets, better and better, and it's almost like you can see quite literally the amount of oranges they're harvesting per season. Um, and maybe the market still doesn't reflect that because of just trading activity.
Yep.
Um, what are the things to really take into account when the data is all there, but you have these large investment banks and hedge funds, I don't want to say manipulating the market, but running lots of trades to steer it in the direction they want.
They want. There's a lot of questions there.
Yeah,
I'll say this right off the get-go, and I hope this gets a cheap laugh out of you. Predicting fruit is apples and oranges from what we're predicting with GDP. So if you're going to predict oranges, that's great. That is a small TAM, total addressable market. There are people that do it for oil. That is a bigger market. Um, GDP is the ultimate arbiter of economic activity. That is the fundamental number that drives everything, whether it's apples and oranges, oil, whatever. That is the baseline. And we can use that, like I've talked about multiple times on this call, for trading and for, state forecasting. We have state forecasters that use this for their state to get ahead of bond issuance and do it for economic development. And so that's one answer. There was another larger question that you asked me. What was it? I'm sorry.
with hedge funds and investment banks,
Are they manipulating the market?
maybe not manipulating,
Are they driving price?
sure.
There is an old adage by the late famed economist John Maynard Keynes that you can stay right longer than the market can stay solvent. These hedge funds can only trade incorrectly for so long. The fundamental driver of any asset is the economic fundamentals. We have a pulse on that. And if you don't, you're behind. And so if they want to bid up the price and bid up the price, that is just getting further from the deviation from the economic fundamentals. They can't keep that up forever, and eventually it'll crash back down to reality.
Got it. Okay, well, let's shift it a little. Tell us about the type of imaging you're getting. There's a lot of, satellite imaging out there. There's hyperspectral, there's, infrared, there's lots of different versions. What are you looking at, and what helps, your models build the most accurate predictions?
Well, like Idris Makhani, who's on the call and did a project on this, we do remote sensing and computer vision. So Idris used remote sensing to track urbanization in Kenya between 86 and 2025, which is a great project. I'm delighted to hear about that. We do 1982 to 2026 or the present. But we use what's called band math for the remote sensing, and then convolutional neural networks for the computer vision. And for the band math, we take different spectral bands and use them in interactive ways to find signal about different things with land use, including expansion and construction, but also what's being fallow and what's being used in vegetative states and whatnot. And we
Got
have
it.
multiple patents in flight protecting this, including PCT, the Patent Cooperation Treaty, and I believe we have it for Africa as well. So we do have it for Africa. I don't know if Kenya is part of PCT, then it would include it. I don't know if Kenya is.
Just thinking of, real-time data and getting this quick and making these predictions as soon as possible versus AI maybe getting carried away and start forecasting what it thinks it's going to be. And you start getting this AI hallucination. Is that something that's a real risk?
Not really.
Not really.
Um, we don't use AI. We use AI in convolutional neural networks for the extraction of the signal, not for making the forecast. We use machine learning for making the forecast, and that's man in the middle, supervised learning. Now, it doesn't mean that I'm directly telling it what to do. It finds the parameterized weights to make the forecast model, but there is not a possibility for hallucination with machine learning in the compunction that we're using it.
Got it. Okay, so if there's a day trader and they want to make a year's salary and be comfortable and they're using your information, they're using Atlas. What are the practices they're doing? Are they trading stocks? Are they doing bonds?
I love
Are
it.
they doing short-term options? Like walk us through the step-by-step of how someone using your platform makes money sitting at home.
Yeah, love it. Subscribe to Atlas. We'll give you the data and you can do it. There's a multitude of ways to do this that I've kind of alluded to, but I'll go step by step here. We like macro exposed ETFs. What the hell did I just say? ETFs are exchange traded funds. They are a grouping of a bunch of underlying equities that usually have an industry focus or something like that. And it turns out that a lot of them have a very large when you have an individual equity, we and the CFA Society estimate that an individual equity has about 30% macroeconomic exposure. But when you group and about 70% is idiosyncratic balance sheet risk. So the income statement, whether they're going to meet earnings that year or that quarter. And when we group them together, you actually transfer the risk from about 30% macro to about 70 or 80% macro. And no longer does the balance sheet of any one of those companies in a portfolio of 20 really matter that much. It matters a little bit, but not as much to drive the overall ETF. It's macro. And so we have an edge on macro. And so we use that chart that I showed you before of the SPY, the S&P 500 ETF tracking against GDP. And we do that for a bevy of macro exposed ETFs. So you can target specific industries that are over or undervalued. And then we use options, derivatives to trade that and with leverage. That's one
Got
way.
it. Okay. And leverage trading options, that can be a bit risky.
Actually, a lot less than you think. With an
Really?
option, a call option or a put option, you pay a premium and then you have the right, but not the obligation to exercise that option later. Now, what that means is if I buy a call option on the SPY, I pay maybe $1,000, but that's it. And then if I make that money back, I make back the 1,000, and then anything on top of that is the cherry. But I've only at risk wagered $1,000 or $100 or whatever it is that the option contract price that you're doing. I'm just use 1,000 because it's an easy round number. And so the risk is limited to exactly how much you're willing to expose as a percentage of your portfolio, and the upside is unlimited. And that's the same for puts. So it's not that risky. There is risk, but it's how much you're willing to wager.
Got it. Okay. So what are some advancements that could happen in, satellite imaging technology, space technology, that could make Atlas even more efficient? If we had twice the amount of Earth observation satellites in there, would that really make much of a difference?
Yes.
Yeah.
Instead of 5 days revisit time, if we had, there are satellite constellations that we could use that are higher imagery and geostationary. So they're focused 100% over a single location. The drop off in price is astounding. If you want real-time imagery at 1 meter resolution, you will pay hundreds of thousands of dollars for an annual subscription for it. If you want 5 day revisit time, you will pay a fraction of that.
Got it. And as observation gets better and better and the resolution gets clearer and clearer, could that help you? I know that there's some limits in, they cap it out of what commercial use can be with
They do.
resolution.
They do.
What's that look like? Like, how high resolution can you get? How high resolution is possible if regulations were to change?
I don't know the answer to that because I'm in the data observation business, not the producing of the data, not producing the imagery. So I don't know the regulations, but I know that they exist for protecting individual people, which is good. We have a whole bevy of ideas for Jack and Roy 2.0 and 3.0, and I don't want to spill the beans, prematurely, but we will be building towards that, and the higher resolution satellites will help us do that. I'd
Got
like
it.
to address Ryan's question. Would you mind, Aidan, if I
Oh
ask
yeah,
a question?
absolutely. Sorry, I didn't see
Yeah.
that pop up.
Um, Great. Ryan, thank you for saying that we have a great product. We actually are fundraising, and the reason for that is we need to continue. We have a burn rate, as all startups do, and we need to continue expanding our geographical reach. Right now, we're primarily the United States, although we have a partnership with the International Monetary Fund to do this for Sub-Saharan Africa. We'd like to do it for every country around the world in real time at local level, localized, granularity. And so we are raising. The product map is we are raising a modest raise now for somewhere between family and friends and seed. So call it pre-seed. We've raised from family and friends X amount, and we are talking with about 4 angel syndicates right now in varying levels of DD and negotiations to get our product, get a little more funding in to pay the salaries for our team that is building this. And we do have a team and a great one. And then we would also like to go to VC for a larger check for a seed to hyperscale this so we become the Coke and everyone else that tries to enter this, and there will be entrants, become the Pepsi and Right Cola. And would you rather have Coke or would you rather have Right Cola? I know my pick, and I hope you do too. Yeah, great.
Yeah, quite literally.
Um, Quite literally. Great. Um, what is the product road? See, that's a fundraising roadmap. Did that answer your question, Ryan, or do you want to know what the product roadmap?
I'm curious about the product roadmap of, is this, you have Jack coming out, and it's upgrading a little. Once you have these models out, it's just sort of perpetually going and running. Do you need a big team to manage this? I'm sure you're always improving, but what does that improvement really look like? Are you building brand new models, or are you just keeping things up to date and maybe making little tweaks here and there?
Um, Yes, the answer to that question is yes. So we
Okay,
are building new models, and I have to be a little cagey about what we're talking about.
sure.
But we also tweak the old models, and it is a big job to build this for 180 some countries of the world. And each country, this is actually something that I find kind of interesting. It's kind of nerdy. Each country has what we have called a unique geospectral signature. Each country interacts with their environment of land use and construction in a different way of a multiplicative factor on GDP. And so it's not like I can just take what we did in the United States and apply it to Kenya. Exactly. There's a certain amount of research and learning and doing that needs to be done. And so that's kind of exciting and cool. And then the larger question that you're asking, Aiden, is like, once we get to scale, what are we going to do with all these employees? That's when we turn the business less from building new products that are off the shelf and more into specific consulting projects for individual governments and investors. They might, the government of Kenya, and this is an example, not something that's actually happening, might come to us and say, we want to do economic development in I don't know. What is it? Nairobi? Is that what is the capital of Kenya? You're Googling. I don't actually know.
I'm looking at the previous question. It just said analysis of a city in Kenya. Not sure. I can Google it.
Yeah, Nairobi. I got it right, but I was stretching here. Um, they want to do an economic development project for Nairobi. We could tell you based on the geospectral signature of what worked in a similar country. I don't know if this is true, but maybe Ghana or something. And say this worked, these policies worked in Ghana based on the geospectral signature. And also, now, because it worked, we think it will work because you have a similar geospectral signature to Ghana. Or we could say it didn't work in Egypt, and therefore you should do Y instead of X. And so there is a whole bevy of implications for this, including security work, national security work. And so we see ourselves transitioning from building product to building consultative services, and being a technological advancement for the world and for these people that want to contract us. Kaylee, thank you for the LinkedIn message. I will follow up with you offline about your second comment. Ryan, I'm delighted the product that I hope that was helpful on what I just talked about with the consultative services. And I do not know Byron, the Gulf South Angels. If you would send me a message on LinkedIn or on the Substack, I would be delighted to connect with them. Is Gulf South Angels like the Arab Gulf, like the Persian Gulf, or is that like Gulf like Louisiana?
That's Louisiana area.
Louisiana,
Angel Network.
Alabama, Florida. Sure. We'd be delighted. Yeah,
Yeah. So I'm thinking about this, and I'm thinking of just how many layers you can really stack on this, and factors you can include into your prediction and forecasting, and you could start getting down to more of a micro level of individual companies. And do you think that's the right approach for the future, or is it better to just keep it simple?
I think all of it is true. Keep it simple and do that. We started at the high level because GDP is easy to be validated. It comes out from the Bureau of Economic Analysis. And so when I thought about this idea years ago in Greenspan's office, reading The Economist magazine like we started, I thought that there could be the opportunity for industrial intelligence, let's call it. But I think GDP was the right place to start. It does turn out to be market moving for financial markets, which hedge funds have a mandate to their LPs to do for alpha generation. And so that's been lucrative. And we would like to expand into all kind of facets of possibilities.
And forecasting models and hedge funds that do exist. They don't like to talk about their strategies. It's very secretive how things work. But like the top tier, like Renaissance Medallion Fund or Aladdin,
Citadel
yeah, or
or, yeah,
Aladdin at BlackRock or Citadel. Do you think they're going super hyper detailed, or is that just keep it simple as well?
I have no idea.
I mean, either
I
I thought
don't
you
know.
might.
I don't know. I just don't know the answer to that. And I need to be cagey about that, even if I did.
Sure, yeah. It's a very fascinating, very complex industry, and I think involving the space technology, the Earth observation, is absolutely brilliant, and you've already proven that it works. And how long has Atlas Analytics been in full operation?
We're babies. I incorporated the company in September of 2024, but I invented the technology when I was a grad student at Harvard in 2018.
Okay, so it's been out since 2024, the company.
A year and a half.
Year and a half. A year and a half from now, what do you think things are going to look like if you stay on this pace?
We have our financial projections in both a forward-looking weighted average portfolio pipeline that gets us to a number of where we'll be in a year. And we also have future back projections out 7 years, and we think the future looks good.
Got it. And when you talk to investors and people who might want to invest in you, what are some of the big questions that they're not asking that they you wish they would because it's quite important?
Yeah. Everyone that I talk to always asks about the technology and eyes widen and kind of move around a little bit. And then we talk about the business model. And they often talk to me about the moat, as you did, and the competitive advantage, and why isn't anyone else doing this? And a question that they sometimes ask is like, were you the first to think of this? And I talk about Greenspan and the advances in computational and Earth observation data. Um, a question that I wish people would ask more that seldom gets asked is the why. Why is this important? And I think producing good GDP statistics is great for financial returns to hedge funds, but more so, I think this is a product that deserves to exist. This is the ability for the Federal Reserve and other central banks, the ECB and the Central Bank of China, to mitigate the effects of the business cycle. I don't think we'll ever totally get rid of it, but if we could reduce joblessness during major downturns, and they happen, that would be a huge boon for society and for livelihood across the world. And that's why I think this product deserves to exist. And that's why I'm passionate about it, is that helping farmers in Uganda and hedge funds in New York, I think both can be true. And I think it's a great product.
I love that. Well, if there's anyone who's listening to our conversation and they were to close their laptop or end the recording and walk away with one big takeaway from our discussion, what would you want that to be?
The big takeaway would be that whereas macroeconomic forecasting was in the Middle Ages, it is now at a renaissance and a golden era where we can hopefully, not hopefully, where we have the technology and we hope to scale it so that we can mitigate we don't have another 2008 global financial crisis in the same capacity or another 1933, 1929 Great Depression. And that would be my takeaway. If you would like to take away and talk to me, I'd be delighted. Um, I can share my email in the chat. I get a lot of emails. Let me share the Substack, and you guys can message me on Substack. I would be delighted about that. And you can find me on LinkedIn, and I'm very vocal on LinkedIn and would love to connect with anyone that wants to connect with me.
And the Substack is atlasanalytics.info for anyone who's listening to this as a recording later on.
Yep, and the website is this atlasanalytics.com.
Atlasanalytics.com. Okay,
I'll put it in
great.
the chat.
Well, Jake, this has been a fantastic conversation. Very eye-opening and very exciting what you're doing. Um, I'm really excited to see where you guys are going to be, in a very short time from now, considering the pace that you're on and the predictions that you've already made. And I just want to thank you so much for taking the time to join us today.
Well, I'm delighted. You made it easy for the conversation. You were a great conversant, and I'm really delighted we had all this panelist interaction. Kaylee and Idris, you guys are wonderful, and I hope to hear from you.
Absolutely. Yeah. Thank you, everyone who was able to join today. Thank you, Jake.
Thank you. Bye bye.
Take care.